Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Monday, July 20th, 2009. The euro-dollar pair rose to a 6-week high in today's trading, breaking above last week's resistance near 1.4150 and climbing above 1.42, which had been the old high for that 6-week period when set on July 1st. The dollar weakened as risk appetite benefited the higher yielders, including the euro. Appetite was fed by a reported private sector bailout of CIT Group and renewed earnings momentum, following upbeat results and outlooks from Goldman Sachs and Intel last week. From low to high, the pair today rose 150 pips, falling just short of reaching the 1.4250 area. The New Zealand dollar rose to its highest level against the US dollar since early June, breaching last week's resistance of 0.65. Global stocks were higher, as were commodity prices, boosting the fortunes of carry trade pairs linked to risk sentiment. From its open, the pair rose about 130 pips to the 0.6560 area and is now up about 370 pips since hitting a low on July 12th near 0.62. The yen came under pressure among the higher sentiment coming out of the weekend. The Aussie-yen pair rallied 150 pips from its open, also extending its gains from the first half of last week. The US dollar-Canadian dollar pair hit a 6-week low in today's trading, falling overnight to the 1.1015 level. Like the New Zealand Australian dollars, the Canadian loonie benefited from higher stocks overnight and higher commodity prices. Last week, the loonie saw very strong gains, and following 2 sessions of sideways action on Thursday and Friday, today saw the Canadian dollar extend its gains. The pound jumped against the dollar as well, rallying 215 pips from its open to set a high near 1.6550. That tests resistance from July 1st, with the next clear visual level of resistance at the 1.6740 area. The pound was boosted by strong stock performance in London, in addition to a report on housing prices. UK home sellers raised asking prices this month by 0.6% in June, following a decline of 0.4% in May. On the year, asking prices were down 3.1%, which continues a trend of improvement. Prices were down as much as 9% in February. The UK housing sector is starting to show signs of recovery after officials rescued banks and started printing money to stimulate lending. In Germany, producer prices were down 0.1% in June, a result that surprised forecasts on the downside. Prices on the year were down 4.6% after dropping 3.6% in May. That was the biggest annual drop in 40 years. The decline was led by lower energy costs, which were down 8.4% in June compared to a year earlier, with crude prices down 25%. Australia's producer prices fell 0.8% in the second quarter, which brought the annual pace of wholesale inflation to 2.1%, the lowest in 5 years. Lower producer prices filter down into consumer prices and imply that inflation will be low enough that the Reserve Bank of Australia can keep interest rates low or cut them if necessary. On Wednesday, Australia will bring its consumer price data. In the U.S., the leading indicators index rose by 0.7% in June, higher than expectations, following a 1.3% increase in May. It's the third consecutive month that the index is up, as smaller job losses, rising stock prices, and stabilization in home building and manufacturing reinforce signs that the economy may be emerging from its worst recession in 5 decades. Tonight, both Japan and Australia put out meeting minutes, while overnight Switzerland releases its trade balance and the UK posts its government borrowing figures. Tomorrow, the Bank of Canada will conclude an interest rate meeting where they will decide on rates and put out a statement. In the US, Fed Chairman Bernanke testifies in front of the House Financial Services Committee. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.